In this video, I am going to show you how you can trade the one candlestick strategy effectively using Fibonacci. Don't skip the video, watch the video from the beginning to the end so that you can get value from the content that I'm going to be sharing with you and the information that you're going to see in this video. Remember guys, if you're new to the channel, give a like on this video, subscribe to the channel, and also comment down below with your questions. Let's engage in the comment section down below. You can also join my free Telegram channel. Link is in the description. Guys, let's go onto the screen and I'll show you how you can trade the one candlestick strategy using Fibonacci. Let's get started. As you can see, I've drawn some illustrations for you here for the one candlestick strategy entry model. You know that in a bullish trend, you mark only bullish candles. You mark the close and you mark the low, and then you draw in between those two lines you've marked, you draw a tradable zone right here, and then you're waiting for the next candle to pull back inside or near the tradable zone, and then you can get your entries. In the past, I've shown you guys how you can use, for example, a 20 period moving average. Like when price breaks below the moving average and then breaks above it again, you find your entries. I've shown you that entry technique before, all right? And this is the easiest for beginners to be able to also trade the one candlestick strategy. However, some of you have been saying, yeah, you're getting stopped out using the moving average, and I understand that because the moving average is a lagging indicator. If you don't know how to find entries at the correct candlestick, you may get stopped out several times using the moving average. However, the moving average is very effective, especially if you're using it with the correct settings, meaning you're using a 20 period moving average and you're waiting for strong momentum candles to break above. Don't just enter when the candle is very small. For example, if you enter on a very small short candle like this, you may get stopped out. What I advise mostly is when the momentum of the candle that breaks the moving average is big enough, you know that there is volume in the market or there is momentum coming into the market which can allow the price to reverse and go in that direction. So when you're trading a moving average, consider the momentum of the candle or the volume of the candle. It should be a high volume candle that breaks the moving average for you to get entries. In that way, you will avoid the stop outs that you are getting. All right, before we go any further guys, I would like to introduce to you the best prop firm that I am using to trade a funded account, as I've shown you in the series. If you're looking for a prop firm that you can use in your funding journey, look no further. Funded Trader Markets is here to help you get funded. Funded Trader Markets offers 3 amazing programs where you get your instant funding, you get the 2-step challenge, and you get the 1-step challenge. Funded Trader Markets gives you a 24 hours payout guarantee, or you get double your payout. FTM has a 24-hour, 7 days a week support to allow you trade with peace of mind. You get up to 100 profit split, an easy method to get paid within 24 hours. You also get on-demand payouts. You don't need to wait for 2 weeks, 1 month, or any other time for you to get your hard-earned money. You get your payouts on demand. They give you the best conditions with tight spreads, no swaps, and the fastest execution in the industry. So you can come down here and look at the trading challenges that Funded Trader Market offers. I've gone through this in the full review video, which you can also find linked in the description of this video. But to show you more, Funded Trader Market offers 1-step evaluation, 2-step evaluation, and also instant funding. You can just use the link in the description of the video to go and check out these programs and also get yourself an account and get started on your journey to getting funded. Now, Funded Trader Market is here to help you get funded with the best price and offer in the industry. You can see the discounts that are running on top here that you can apply in your first purchase for you to get the cheapest challenge account and get started on your journey. Please use the link in the description of the video and sign up with Funded Trader Markets and see yourself getting funded. Now, I have no excuses to tell you this is the best prop firm that you can trade with. As you guys have seen in the series of videos that are produced, I have gotten my payout and there is a second payout loading very soon. So guys, let's all jump on board, get started with Funded Trader Markets, and see you on board. With the moving average, yes, you can get very good entries, but in this video I wanted to show you how you can use Fibonacci in combination with the moving average and other techniques for you to be able to get very good entries. Now, for Fibonacci, it is easy to do Fibonacci if you understand how to trade Fibonacci. If the market is going up like this in an uptrend like this, creating high highs and higher lows, you want to measure this retracement here, the pullbacks. That is why it is called a Fib retracement tool because you're measuring this retracement here for you to get into the market to continue that trend. So in an uptrend, you draw the Fibonacci level from the most recent higher low, which is this one, or most recent low, and then draw it to the most recent higher high, which is this one here, like that, and then you project it forward like this. As you can see, the Fibonacci here comes back between the 50% and 61.8 level, which is the golden zone for Fibonacci. Now once that happens, you can find your setups when you see maybe an engulfing candle moving away or a rejection wick moving away from this golden zone for you to be able to trade. Now some of you also were asking me for the settings I use for my Fibonacci. Now you guys can just pause the video, take a screenshot of these settings here, and then you can also be able to use the same settings right here. So that is it about drawing in an uptrend. In a downtrend, you just do the opposite. If the market is going down like this, creating lower lows and lower highs, you want to measure the retracement going up for you to get into a trade here and then continue the trend down. So you draw the Fibonacci from the most recent high to the most recent low here and then project it forward like this. So you can see when price pulls back up into the golden zone, you can look for entries around there and then you jump into the market. So this is very good, especially when you're trading with the one candlestick. It can be very helpful to you to find entries, especially when you're doing this after you've analyzed, done your own analysis, and then you come in here, put a Fibonacci, can help you to find better entries. Remember guys, all the information that I'm sharing here in the video and on the channel is not financial advice. All I am sharing are techniques and methods that I use to trade the FX market, and they've been really helpful for me to be more profitable. If you want financial advice, please seek financial advice from a certified financial advisor for you to make informed financial decisions. In this case, for the one candlestick strategy, we are assuming that this purple zone is the same as this one, but this is a representation on a lower time frame. So this green candle here, this is its internal structure. So what you do is, in this internal structure, as the market is going up, you're going to wait for the most recent low and the most recent high before the tradable zone. That is what you're going to mark. So you get your Fibonacci, draw from here, this is the most recent low, and draw it to that high before the market pulls back inside of the tradable zone. Draw it like this and move it forward like that. So in this case, you're waiting for what is going to happen when the market pulls back inside of the tradable zone, which is this purple zone, and you want to see which level of Fibonacci the market pulls into. So in this case, for this illustration, the market comes down into the golden zone but breaks below it and then breaks above it again like that. So you're going to be looking for entries around the golden zone. I'm going to show you guys that on a real chart so that we can see how this works using bar replay. So let's go on to bar replay so that I can show you how you can find entries using Fibonacci. This is going to be very effective, but also if you want to learn the entire process of trading Fibonacci, I am going to leave a video at the end of this one. So please watch this video till the end, and then I'm going to leave a video at the end of this one. Click on that video, go and watch it, and you will see the detailed way you can trade Fibonacci to enhance your entries with the one candlestick strategy. So let's go on to bar replay and I show you an example of how I would get entries using Fibonacci for the one candlestick strategy. Remember guys, also give a like on the video, subscribe to the channel if you're not subscribed, and let's push forward. So guys, we are here on bar replay. This is Go Charting platform. We're using a bar replay right here, and what you are looking at here is a typical downtrend on gold. The most recent reversal we saw on gold is this one. You can see the trend is being supported by the 20 period moving average, which is above the price at the moment, and the most recent candle has closed red. So I have marked its high and its close, and I'll put a tradable box in between those two lines. This is on a 4-hour chart, as you can see. So now I am going to go down to the 5-minute chart. So here on the 5-minute chart, we can see that this is the same drawings from the 4-hour chart. Now this strategy is based on retracement or continuation of momentum. Alright, so here we are looking at the continuation to the downside, but we want to first wait for the market to come back inside of this tradable zone to give us a suitable entry or a better price for us to sell. You cannot start selling at lower prices. You want to sell always at higher prices. That's when you make profit, even in real life. So this strategy is based on real life conditions or market conditions. That's why this strategy works so well. All right, so here I'm going to consider a Fibonacci drawing from this high here. This is the most significant high. Yes, there are these small highs here, but these are not really good high points. This is the most significant high in this general move here. If you look at this entire move here, this is the most significant recent high, this one, and now this is the most significant recent low here before the tradable zone. So you want to consider that when you're trading, you are using Fibonacci with the one candlestick strategy. So what I'm going to do now is I'm going to plot a Fibonacci from this high here to this low here, down here, and then I'm going to stretch this to the front like this. Okay, so I want you to notice where those two golden lines are. That is the golden area for Fibonacci. That's where I want to trade around. So I'm going to play along and see. Now in this case, I've also added this 20 period moving average just for confluence. If I find a break below the moving average and also a break away from the golden zone of Fibonacci, that is going to give me a solid entry, which is most likely to play out. So if you add Fibonacci with the moving average, to help you get better entries. All right, so let's play along and see. So we see a retracement inside of the golden zone. It breaks above and comes back inside. It's playing around the golden zone, producing rejections around the golden zone. As you can see, the moving average also, the price has now broken below it. As you guys can see, price has now broken below moving average, but it is still within the golden zone. So what I want to see now is a good candle which breaks away from the golden zone to continue down. That's when I'll find an entry. So let's see. Now there I could get my entry on this candle, and then a stop loss I could put it above the golden zone like this, and then I can target the previous lows down here for a 1 to 2 like this. So if we play this, we can see how this would play out. So in this case, we have used the golden zone. We waited for market to retrace around golden zone and break below it for us to continue selling this market, or we are looking at a break of the moving average. All right, so we have two confluences that are supporting the continuation to the downside. The Fibonacci is telling us that the retracement is over because the market has pushed up and created rejections here at near or within the golden zone, and now it has broken below the golden zone to continue going down. So we know that this retracement is over, and also the moving average is now above the candles, which means the trend is now continuing to the downside. So we have two confirmations, and also here you can see that we have large red candles starting to form, meaning the momentum is shifting back to bearish. So those are all confluences you can use with price action and these tools that I have shown you, which is the Fibonacci and the moving average. So let's play this and see how this works out. Okay, so you see this goes into profit, this goes into profit, and then let's see if it reaches. There you go, it reaches, take profit. In fact, you can even get a 1 to 3 if you're trading with Fibonacci. It gives you a very good risk to reward. You can see how big this risk reward would be. That is how you get entries using Fibonacci. Let me show you another example now. All right guys, so in this example, this is a bullish example. It's still on the 4-hour chart on gold. As you can see here, I have seen that okay, the trend is moving up based on the strategy. You guys know the rules of the strategy. In an uptrend, you only mark bullish candles. As you can see, the candle is above the 20 period moving average, so that is a bullish trend. Okay, so I have marked the most recent closed bullish 4-hour candle, marked its close and its low, put a tradable zone in between. So I'm going to go down to the 5-minute chart, and then we'll look for entries using Fibonacci. On the 5-minute chart, we can see that this is the same tradable zone we drew on the 4-hour chart for the bullish move. Now what we are going to notice here is we notice that this is the most recent significant low, and this is the most recent significant high. Remember, in an uptrend, you draw the most significant low and the most recent significant high for you to measure the retracement. So in this case, I want to measure how much the market is going to retrace into this zone for me to get an entry. So I draw from this here, this low, to that high there, and then project forward like this. Okay, so you can see the golden zone is between the 50% and 61.8 Fibonacci. And also in this case, you can notice that the moving average is below the price. So we want to wait for price to break below the moving average possibly, and also reach around this golden zone for us to get entries when the market breaks above the moving average, and also gives us a good entry away from the tradable zone within this golden zone of Fibonacci. So let's play ahead and see. All right, so market comes inside of the golden zone. As you guys can see, if you zoom in, we see that the market comes inside of the golden zone. As you can see, that candle comes, first one rejects it. This red one is also in the golden zone now, okay, and it's broken below the moving average. Let's see what happens. Okay, so you can see this red candle breaks below the 20 period moving average, and then this next bullish one breaks above the 20 period moving average. You could get an entry here, but this is a small candle. Now this is why some of you guys get stopped out while you're trading with the moving average, because you're entering on small candles like these ones here. You want to wait for a big candle like this one, which is above the 20 period moving average. Now in this case, there is confluence that, okay, we have here a 20 period moving average that the price has broken above, and it's rejecting off of this golden zone of Fibonacci here perfectly, and also it's giving us a very good strong momentum candle here. So we can enter our trade from there. We can enter a long trade right here, and then we can put our stop loss just below the golden zone right here, and then we can just target just a 1 to 2. Okay, in this case we can just target a 1 to 2 for just an example. Okay, you can target a 1 to 3, 1 to 4 with this entry model, because this gives really good risk to reward ratio trades. All right, so in this case we're just doing a 1 to 2 for you to test how this works. Okay, so here we're using Fibonacci and the moving average in combination with price action. You're reading also the price action to see if there is momentum shifting to continue to the upside away from the tradable zone. So let's play along and see. All right, so market goes up into profit, comes back into drawdown, back into drawdown. We're up in profit again, we're up into profit. Let's see how it goes. Okay, so now it moves into profit. As you can see, the moving average is consistently below the price. Now you can see that this trade does go and hit take profit. Some of you were asking this question in the comment section down below. Do you have to adjust the zone when the next candle prints? You can adjust the zone when the next candle prints. If the next candle is also bullish, you can adjust the zone. But if the zone is still valid, like for example this one, it is still a valid zone, I don't have to adjust it. I can still wait for market to come back into it, and then I take trades. But if the market moves away very far from this zone here, you can adjust it to the next candle on the 4-hour chart for you to get entries. That is the video, that is the setup, that is the strategy, trading it using Fibonacci. If you like this video guys, please give a like on the video, subscribe to the channel, and also comment down below with your questions. Use the link in the description to go and sign up with Funded Trader Markets, get yourself funded and get started on your journey to becoming more profitable. Thank you guys for watching. Until next time, peace and out.